Motilal Oswal Mutual Fund has come up with a new fund offer, or NFO, for a sectoral mutual fund. The name of this fund is Motilal Oswal Manufacturing Fund. In this video, we'll understand the importance of the manufacturing sector, its importance in India's economy, what the performance expected for this sector is, and also discuss about the salient features of this new mutual fund. We are confident that this information will help investors about this new fund's objective and its future potential. Most of the information for this fund has been taken from the new fund offering document and its presentation. If you like content like this, please feel free to subscribe to WealthAbhi. In a recent report released in late October 2023, S&P had said that India's economy will more than double to $7.3 trillion by 2030 from $3.5 trillion in 2022. This is a significant growth projection. The growth in manufacturing may be even higher. If we see the historic data, we can see that manufacturing had often been the driving force behind the growth of emerging economies. In India, the contribution of manufacturing is 14% of the GDP. The most important fact is that it has seen the most visible growth last year. It is expected that the growth in manufacturing will continue for the next decade, and the growth will be much more than the growth in GDP. The role of manufacturing is very important in any country's economy. It brings holistic growth to the economy, which will bring inclusive growth to all sections of the population. The growth also becomes sustainable as it provides large-scale employment. This large-scale employment brings in economic stability and income. This holistic growth and large-scale employment brings in macroeconomic stability to India's economy. For India, there is a convergence of several factors which will lead to a manufacturing boom. The first factor is opportunity, both internal and external. Internally, India has a large consumer base. Externally, India is looking for huge export opportunities, especially driven by China Plus One policy. The second factor is capability. India has a large number of skilled labor force as well as low cost of labor. Both this as well as improved logistical infrastructure and advanced service ecosystem help in keeping the production cost lower. The third factor is the favorable environment by direct government benefits through several schemes as well as favorable macroeconomic stability over several decades. While the investment was mostly driven by government expenditure, the private capex is showing significant upturn due to high level of capacity utilization. With all these factors, India is now poised to take a leap in the manufacturing sector. In this scenario, Motilal Oswal Mutual Fund has brought in an NFO focusing on the manufacturing sector. This is a broad sector with about 691 companies having market capitalization of 1000 crore rupees and more. This sector covers diverse stocks with 55% large cap, 22% mid cap, and 23% small cap funds. Motilal Oswal is already a veteran in stock selection, and their existing large cap, small cap, or multi-cap funds have a strong presence of manufacturing sector stocks. The funds are high performing. This manufacturing fund will also follow the same time-tested philosophy of stock selection, which depends on quality, growth, longevity or sustainability, and price or valuation. This fund is suitable for investors who are looking for long-term wealth creation with an investment horizon of 5 to 7 years. Also, the investor should be willing to bet on India's growth story in manufacturing sector for the next decade. Motilal Oswal indicated the fund investment strategy as well. One interesting aspect is the focused approach. The fund is expected to maintain a focused portfolio of 35 stocks identified based on their strong stock selection criteria. Motilal Oswal Manufacturing Fund is benchmarked against Nifty Manufacturing Index. Both the benchmark and the fund are considered as very high risk category as per Riskometer. The fund is presently open for NFO and will be open for subscription till 2nd August 2024. For lump sum, the minimum investment amount is 500 rupees with additional investment of any amount. For SIP, the minimum investment amount is 100 rupees with a minimum of 6 installments. Investors should also be aware that mutual funds are always subject to market cycles and hence the return cannot be guaranteed. Any potential investor should not consider this as an investment advice. They should consult their advisor before subscribing to this mutual fund. They should also refer to the scheme information document. However, if the investor is looking for long-term capital appreciation, this fund may bring rewards. Hope you found this video informative. If you liked this video, please don't forget to like it and subscribe to our channel. Also, press the bell icon to be notified of our future uploads.